All right, welcome everybody. Good afternoon. Today is the 22nd of March, 2020. Today we're going to go over our Trendy Futures Blueprint, and today I will be talking about the ES futures and the CL or oil futures. Let's go ahead and start here. The first thing I want to point to your attention is the monthly candle. I think this is really important during a time like this where price is moving fast, that we concentrate on the bigger time frame, and then I'll move you into the weekly and then the intraday or the night trading that we'll be getting into for tonight on the ES and the oil futures. First thing I want to take into consideration is the trend, the overall trend, maybe where the origin of this move started, and the frame or the range that I am trading and applying the methodology to. All right, so a couple things here. I'm just going to go ahead and draw on the chart. We're looking at all the way from 2009 into this peak here into 2020. Notice that we created demand down here and supply. However, the range that I'm working on is going to be this pivot high into this pivot low. Notice we have the trendy edges here. Trendy edges are there to identify demand when they are below price, and the edges to the upside are to identify supply when they are above price. As you can see, the origin of the move puts us into and or roughly around 1980. Okay, and the top of this move around our trendy edge is some supply around the 3160, 3150 level. Notice I have some Fibonacci's on here. 618, 76.4, and the 88.7. I'm going to go over these very quickly. If I were to use the range that I'm concentrating on right now from pivot low into pivot high, you can see where those numbers came from. Let's go ahead and exit out of this. And now you know why those numbers are there. Using the methodology, you can see during this trend, if price were to pull back and break the 618, we have now broken the trend that I have measured. Okay, the 618 is the golden Fibonacci ratio. In this case, we have broken the trend that I am measuring. Let's go ahead and move over here. Now that we've broken the 618, where would I be looking for price to move into? Well, on a monthly candle, you can see we do have demand in this area that is confluent to the 76.4. Also note, I use previous trendy edges for targets. As price was moving down, we would be looking to the left to identify these. And you can see as price moved down, this would have been a target. This would have been a target. This guy, and you can see now we'd be looking for this down here. Targets to the downside into the 76.4 would be 2249 and 3/4, 2219 and a half, and then underneath that again the 76.4 at or around 2177 and a half. If price breaks down below this and makes lower lows, I'm looking for it to dig down into and or around the next trendy edge around 2102. Now here we use a methodology. I call this the imposter level. The reason why I call this the imposter level is that in most cases after breaking the 618, we move into the imposter 76.4. You usually get a really nice swift bounce here, back up to and or around the 618. I call it the imposter because a lot of times, because of the timing is the variable. I don't know if price will move from the 76 back to the 61.8 within 4 days, 2 weeks, 3 weeks. But what happens is most traders, they forget about the bigger picture. The bigger picture says we are still below the 618. The range that I measured is still broken. So then, traders, they start to feel confident around this level and they start to really push on the size for the upper levels that I have identified here. And you can see those 25.28, 28.22, all the way up to about 3,000. And then what you will notice is if we cannot, this is a if this, then that scenario. I would say at least given 3 to 4 days, if we can make higher highs off the 618, then I would be feeling a little bit more confident to the upside. But in so many cases, back testing this methodology here, we find that price will actually break down and the probabilities of coming back into the 88.7 is around 85%. Now notice that the 88.7, my favorite number, is confluent with demand. Okay, so all you supply and demand traders out there, you know what I'm saying when you look at the structure here. 88.7 would be my target if we start to break down below the 2177. Now what voids that? Again, if price were to start bidding, going bid above the 618 at some point, holding and making higher highs, I'm looking for the move into these higher time frame targets. Again, what I've pointed out today for you on the ES is the range that I'm using. And then I went ahead and showed you the entire range from 2009 all the way into 2020. The market repeats itself. When price pulled back into here, it actually came into these demand areas. You can see here with the arrows. Price has moved up, and it has not actually come back into this level ever. Here, same thing. Price has not moved back into this demand level. Price has not come in here, and price has not come into here. Some traders are looking for that 1980 level, and you can see why coming into right here. Okay. All right, so let's move over here into tonight for the ES, and I'm going to take you to a 30-minute candle. Now you'll notice on my screen, members as well, you'll notice these green boxes here. This is what we call a daily edge. So you know we like to use the edges here. I don't typically talk about the dailies. We got some traders in here scalping very nicely off of the daily edges. And I just want to show you, I mean, basically I want you to, I'll get to this here in a second. All right, but just kind of ignore this for right now. And let's look at structure. So on a 30-minute, I want you to pay attention to the blue line. We always do. That's the line in the sand. That's 2288.75. Again, this is for tonight. If for some reason we start to bid above the line in the sand, notice we have a supply zone here. If we could build value above that zone around 2298, look for price to move into 2317. And again, needs to hold the levels within the zone to move up into the backside of the zone around 2331 up into 2343, where we have supply again. So during this whole 30-minute range of moving down, we created these selling pressure candles out of the base candles, creating those pockets or pivots of selling pressure. Notice also if we were to V-shape recovery, we'd be looking at that 618 that I just showed you on the monthly. The origin of the sell-off came right into this area here. Okay, and you can just identify that if you wanted to. Okay. And I could do that by just using a couple lines here. Now, my targets to the downside, I'm going to leave them here, but please note we had that lower here that we came right into right before the close yesterday, or Friday, I apologize, at around 2261. If we start to break down below that, again, 2249, 2219. To the upside, 231764. Above that, you could put another target in here right around the basis, okay, on the upside. Give me 1 second. Right there. And then right outside of this box. If you want to see that closer, looks like this. Target right above here, target right there, and target right before that base. All right, so this is our blueprint going into tonight. Again, the line in the sand is so important. If for some reason we have a pop on the open and it cannot get over, we create that base, make lower lows, and take out Friday's low. Look for these targets to the downside. Same thing, look for the same thing, lower lows underneath here, looking for that move into 2219. If we start to build structure again above the line in the sand on higher highs, I'd be looking for 2317.64, 2332. What we've been noticing over the last several weeks, these are moving very nicely in both directions for us. Let me make one thing clear. Trading futures is not easy. Matter of fact, trying to trade the ES in this volatility can absolutely wreck your account. I like the micros. It's giving you a bigger range. Let me just give you an example. 1 point moves on the ES, you're talking 50 bucks. On the micro, okay, you're only talking $5. $5 opposed to 50. So if I'm wrong on 10 points on an ES, we're talking $500 on that contract. And literally 10 seconds is happening within microseconds. So you can be, so sorry, 1 point to 10 points is happening so fast, you could be out $500 a contract like that. At least on the micros, I'm able to give myself a little bit wider stop. And if I'm taken out for, 10 points, I lose 50 bucks. Okay? Still got some skin in the game, but not as dangerous. Again, if we start building value above here, okay, making higher highs, looking for the move up here. What we've been noticing is we're getting those quick moves on the opens, and then, everybody gets excited and right back down. All right? It's almost the same thing over and over. All right, so sorry about that. Just a quick little pause there. And then moving down into targets and up to targets, I'd be looking for quick volatility into these and then straight back down. Again, we need to build base above the 618 before I start to get excited about any kind of bounce. Now that's 2410, so that's a really nice recovery if we can get up there. Okay, and you can see that. Nice V recovery right into here. All right. And again, supplies here could move freely all the way into 2471. Big move. All right. But if you notice, this is pretty much right in line with everything else. All right. Just kind of building a flag here on a bigger time frame. Okay. Bear flag. All right. Let's go over into the CL. We're going to go to the monthly, just like we did with the ES. I want to show you the bigger picture here. Okay, price came down into, let me show you this on a monthly candle. I'm going to move down here, right here into a demand zone and or the prior edges. And then we have down here at the origin of this move, we have 1368 by 1046. So this is a level that I would definitely keep your eye on if for some reason we start to break down below the lows of 1713. Okay, right now, this zone right here is working. Okay, the zones are found by structure. You can see that in the edges. Price came into here and so far is holding. Now what I did was I put us, basically at this low. You could raise this up a little bit. Um, if price starts to hold above this previous low, showing that now it's no longer resistance, it could turn into support and we could pivot off of here. What we'd be looking for is a nice base candle and higher highs to give us that move back up. Okay. Again, this is oil. To the upside, we have some, this thing could run if you are going to catch it at the right time. That's for sure. Let's come on down here to the weekly, see what we have. Okay, you can see that's the zone that I've identified. And then moving over here again on the weekly, if we were to get a nice run out of oil, could come back up into this wick here. Okay, see that wick? You want to be paying attention to that. The previous wick come down just below that, price being around 27.19. Now let's get over here into the 30-minute. The 30-minute, you can see, make sure you're using your EMAs. You can tell they are resistance until proven otherwise. We had the line in the sand for tonight. It's at 23.81. If price can hold above the line in the sand and make higher highs, could give you a really nice move into 24.55 by 25. This area here does not necessarily have to be resistance. Okay, this is where a lot of traders get this wrong. So we just kind of want to trim there or watch as price gets here. You can close trim, but if we stay in the zone and make higher highs in here, we're looking to the backside of the boxes and or the targets at 25 and 25.26. If we start to break down, look for price into 23.09, possibly back into 22.49, and a break below that, I'd be looking for 22, 21.75, and 20.87. Now understand when you're looking at my targets and so forth for both of these, the ES and the CL, targets are in or around supply and demand. Supply is above price, demand is below. And what you will find at each one of these, the reason why I like to trim at these levels is because when price gets there, it can be rejected very quickly. Okay, just like when price, if you're in a short and we're coming into one of my levels, I want to be trimming or closing because we could get some demand moves from these areas. Okay, all of these confluent, supply and demand. I like to use targets. I like to have nice entries, and we take those entries off of structure. Overall, looking at the sentiment, I have no idea. I'm not a futures teller, okay? I'm here to show you a process, and we use that process methodically and sequential. If this, then that. If price breaks above the line in the sand and does this, then we're going for that. If price breaks below the line in the sand and does this, then we're going for that. Very straightforward. All of my trades are entries, stops, and targets with the focus of being we want to get on return more than we're putting on our risk. Okay? Very important. Understand that all of these are very volatile right now. They are dangerous, but with the right approach, using the right process, whether you're right or wrong, it should not sting as much. If you're coming into the market and you have no plan, no lines, no process, no technical experience, good luck to you. If you'd like to learn, please come and check us out. You can check out my YouTube, which is also linked to my Twitter account. If you like the video, please give us a thumbs up. And in the meantime, why not check out trendyoptions.com? We'll see you soon.